What's up, investors? It's the Russian dude. In today's short video, let's talk about that the probability of a more radical rate cut of 0.5% during the next FOMC meeting in September. Recently, it skyrocketed. So it seemingly came out of nowhere. So let's discuss what happened in today's video. Just last week, on Wednesday, after the most recent CPI inflation report, the probability of the rate cut to 0.5% decreased significantly. It went all the way down to only 14%. But then, in less than 1 week later, at the moment of recording this video, it's Monday. Guys, you're watching this video on Tuesday. Right now, according to this graph, as you can see, the probability increased all the way from 14% to 59%, making it more likely for a 0.5% rate cut to happen rather than 0.25% rate cut. One of the biggest sentiment among the market participants right now is that probably the Federal Reserve loses just a little bit of control over the situation. Maybe the inflation, the jobs data are not to their much liking. Let's be honest, not a single time things are going according to exactly your plan, and so maybe this is also what's happening right now with Jerome Powell. He kinda wants to see a little bit different numbers, but the numbers he's seeing right now are adequate, they are okay, and the rate cut, after all, from 0.25% all the way to 0.5% is not that significant if you think about it, only additional 0.25%, but it is not the same for the interpretation by the market participants. They are expecting a rate cut in September with, I would say, 99% probability. So this thing is out of the question. The only question they do have right now, whether it's going to be 0.25 or 0.5%, and if 0.5% happens, it will tell the market participants that maybe the situation is not as, the financial situation maybe is not as stable as Feds want us to see. For this reason, this might be met in case 0.5% rate cut happens. This might be seen as a sign of panic. Some investors would prefer not to risk their holdings, their assets. They might start selling some of their positions, including both fixed income securities and other securities. And well, in return, this might cause a temporarily correction on the stock market, to say the least. If this will be met with the chain reaction of events, we might see a full-blown recession, but after all, at this moment, there are no other significant economical factors besides obviously a growing US national debt, which might become a black swan event, which can trigger a much bigger recession that people are expecting. So let's see what's going to happen. It is already mid-September, so this FOMC meeting where the Fed pivot will happen is gonna happen very soon. And as always, guys, I will be here to give you the most recent news on the stock market. So if you want to continue watching such videos, please like this video, subscribe to my channel. Thanks so much for watching. See you tomorrow.